Welcome to our video, this time devoted to incomplete records. Still within FA2 maintaining financial records paper, the express videos based on express notes. Right now we're on page 42 in those express notes. Now, incomplete records is one of the most fascinating parts of the syllabus. You might not feel it this way, because it does seem totally complicated, but it does give a brilliant insight to the examiner on whether the candidate knows something about accounting or not. Incomplete records. Now, to figure out what the problem is, now imagine that there was a big fire, and as a result of that fire, most of the accounting documentation was lost. And now you have to recreate some of that information in order to produce valuable financial statements. Now, how do you do that? Well, first of all, you may use cost structures. So if you have a piece of information, you will be able to recreate the missing pieces. Now, because we know how T accounts work and what are the standard postings like debit, receivables, credit, revenue, right? It's a standard posting. We know it always works like this. So we may figure out, if we have one, we may figure out the other one. And also using the accounting equation. If you recall, the accounting equation means that assets minus liabilities equals equity. And if you disaggregate that, you may recreate certain elements of this equation. Now, before we do a tiny example on that, let's look at the margin and markup. This is something that everyone knows about and everyone gets it wrong in the exam. Is it because of stress, time constraints? I don't know, but there is a problem. So remember, markup is, as the name suggests, we need to up something. So we have cost, and on that cost we have this up factor. And therefore, if we have the cost of 100 and we say the markup is 20%, meaning the price is 120. That's the markup. Now, margin, as the name suggests, is within something. Like margin on the paper, on a piece of paper. It's within that paper. So if you have a 20% margin, if you have the price here, now that 20% is the margin. So if you have a price of 100 and the margin of 20%, meaning cost of sales is 80. Now, let's do a tiny example. What we will be looking for is the carried down amount of payables. Some of the information is missing. We know that opening inventory was nil. We don't know the purchases, but we know the closing inventory was 50. And even if there was a fire in the accounting department, we can check it, because closing inventory, obviously we can check in the factory, we can count it. We know that the selling price or sales revenue was 120, and that there is a markup of 20% on every sale. We also know that the brought down balance on payables was 20. We can check that with our financial statements from last year, and we know that during the year we paid 70 to our suppliers. That we can easily check with the bank. So these are the pieces of information, and we want to come up with the carried down balance on payables. Now let's see what we need to get to that carried down balance. We know that the brought down balance was 20. We know that cash paid was 70. We want to know what the carried down balance was. Oh, well, we need to know what purchases were. Again, as I told you before, we know that certain accounting entries always go in the same way. We know that there is an entry that goes debit purchases, credit payables. So if we have that credit, we will be able to derive the carried down balance. Alright, but we don't know what the purchases were, but we've got the cost structures. Our cost of sales is made up by opening inventory plus purchases minus closing inventory. Closing inventory was 50, opening inventory was 0. We know that the sales revenue was 120, and that includes a markup of 20%, which leads us to a conclusion that the total cost of sales must have been 100. Now, if the total was 100, then obviously purchases must have been 150. And if purchases were 150, then our carried down balance must be 100. Alright, this is how a solution to an incomplete records problem looks like.